Pack. We'll have Tech Mahindra that'll be reporting its numbers. Reema is standing by, and in fact, she'll tell us what to expect. Hi, Reema. Good morning.
Hi, Nigel. Good morning. Well, the numbers could be fairly decent. So we're working with a dollar revenue growth of 2% on a quarter-on-quarter basis. Rupee revenues should be higher by about 3% quarter-on-quarter. Margins should improve by a little more than 100 basis points at the EBIT level to 12.6%, and that should drive a 21% increase in the company's profitability. So we're working with a dollar revenue growth of 2%, so constant currency growth should be closer to the 3% mark. The top line will be aided by a 1.5-month incremental contribution from an acquisition called Target that they've done, which could add about 50 to 60 basis points to their top line. Not just that, the telecom business, which is about 50% of their revenues, is showing signs of stabilization, and this could be another stable quarter. Remember, in the previous quarter, telecom had clocked in about a 2.3% growth, and enterprise, which is the rest of the business and has been growing above the, in line or above the industry growth rate, should have another good quarter. Margins will expand. We told you about more than 100 basis points expansion in margins on a quarter-on-quarter basis, and that will largely be on account of an absence of 120 bips restructuring costs that we had in the prior quarter. The stock has been an outperformer in the last 3 months compared to its peers, and the key reason is Q2 was a good quarter for the company, and plus telecom, which is 50% of their exposure, was a big drag from FY14 to FY16, and now that is showing signs of stabilization, bottoming out, etc. And the rest of the business is clocking industry growth rates. So that's the reason why Tech Mahindra has been moving up. What we'll watch is the margin trajectory, because margins used to be at 12%, now they're down to that 11-12% mark. So an improvement in the margin trajectory will also be tracked closely.
Okay, Reema, thanks.